Okay, so the company so is on the daily. So on the daily, no, identify say price or this small correction which created this value area here. Now price about tap into the structure again. Now price about tap in correctively. So we moved impulsive in the correction. So we're expecting this reverse around to this at least 90% of the range. So this runway is what I'm going to test. Me better testing with the plan. So on the daily, let's say we have this structure. So price LED gaps and the price alphabet tap into a structure on the daily. And it gives us the opportunity to sense the field down to the 4 hour, right? So now on the 4 hour we stay on the 4 hour, you can see 1, 2, 3 clear structures to the highs. Price has broken the structure and broken back in. Now this is what gives me the advantage. This is what gives me the opportunity. Okay, so now here is the positioning. Price is positioned at the value area. Price is positioned at the value area. So you can say here's a value area. Price has broken the structure and now it's broken back in. So with this structure, me stay on the 4 hour. The plan is to take a 4 hour structured and a 4 hour non-structured flag. I say if say a 4 hour structured flag, it will be taken as a risk entry in a 4 hour or in the 1 hour, and it can be also taken as a reduced risk on the 4 hour if a friend say if say a 4 hour structured, if say a 4 hour non-structured flag, it will be taken as a risk entry on the 1 hour. If say a structured or 1 hour, if say a 4 hour non-structured by a 1 hour structured, it will be taken as a risk entry. If say a 4 hour non-structured, I will be taken as a reduced risk on the 4 hour. Okay. So let's look at this one here. Price dropping impulsively. We had this correction. Price moving up. Now price correcting. So I will stay on the 4 hour. That's what I do. I will think on the normal way. I will go to the lower time frames to identify the structure. But yes, here's on the one we can see that there was a hook point here. When I price the movie impulsive and the correction, nearly tap into the structure. Let's look at it on the 4 hour. So this is how I may approach it at the end. May approach structure. So here it is a 4 hour non-structured. You can see there was a hook point on the 1 hour. What happened? Price came back impulsively in a build-up correction into the zone 1, 2, and a third touch, and we broke back in. So a 4-hour non-structured, a 4-hour non-structured. So I will take it after this close here. So this one will be time 10 o'clock in the morning, London session. So min take away after price it will be impossible. Min take away if I'm in the structure, if I'm in the mover, because I'm take away because if you leave this gap, not surprise it tap into this structure. Let's see, sorry, you know. So let's see all of this structure. And it hasn't happened yet. Then we tap into the structure. Now price are dropping possibly like this. It is not it is not an entry. This is not an entry. This is not an entry. So this is not, the mechanics are not in place. The three drives in price. This 1, 2, 3 drive that I'm looking for, and I can see say pricing will be possibly and a correction. So this is the third model, and I'll continue the move looking at this reversal. This is a reversal model, but I will take it because of this impulse and this correction and this continuation move that I'm looking out for. So 1, 2, and the third touch. So I'll take this as a 4-hour non-structured. And this one is, if say 4-hour non-structured, I can take it as a 1-hour structured risk entry as a 1-hour structured. So let me so this is the first entry. So I took it as a real 4-hour non-structured. 4-hour non-structured. So there was a hook point. There was a hook point on the one now price pushed impulsively, and then built volume, and then built volume towards between here. This was a third model. Okay. Now, so structure now let's look at it on the 1 hour, because even say a 4-1 structure that is supposed to be a 1 hour structure. Some impose and this correction, so I will delete this and keep the top. So 1, 2, and the third touch, and tap into the zoom, or you can see the structures here. 1, 2, again the third touch. So when price comes to this structure, this is the risk entry on the 1 hour. After SAR rejections, if any SAR rejection I can do this and put my stop. Let's see, 12 pips above here, above the highs here. Here is the risk entry. And here is the risk entry on the 1 hour. So here is the risk entry on the 1 hour. If surprise, if push it down as here is the reduced risk on the 1 hour. But let's look at SARC. So even to take it as a risk entry on the 4 hour, that means before certain will happen, I would have gotten the risk entry on the 1 hour. and I've gotten the risk entry on the 1 hour and the reduced risk, which will be the 4-hour risk entry, and the reduced risk, which will be the 4-hour risk entry. So here will be the entry. So it means I've gotten 3 opportunities, 3 entries from this 4-hour non-structured and the 1-hour structured reversal model towards these hook points. Okay, let's look at the next sequence, which is this. If you look at the structure on the 4-hour, it is instead of not structured, but you can see price dropped impulsively. We had this volume that was built, a correction, and then you're looking out for, you're trying for this, you are looking out to take out this next impulsive run. So if that is the case, this one is a 4-hour non-structured flag. So if it is 4-hour non-structured flag, what does the plan says? Plan say if say a 4-hour non-structured flag, it will be taking us a risk entry on the 1 hour. If it is structured on the 1 hour, you will take it as a 1 hour structured flag, and you can take it as a reduced risk on the 4 hour. So let's look at this structure. Let's look at the next sequence. So we've identified say a 4-hour non-structured. If a 4-hour non-structured, we are saying say we take it as a 1 hour structured. Okay, so so 1, 2, 3. Here will be, because of the 4-hour non-structured, here will be the risk entry on the 1 hour. You put your stop above the highs, 16 pips. You put your stop above the highs, or if you want to be fully protected, you can put your stop above this highs here, 30 pips. But I will put my stop above the highs here, the high of the third touch, maybe 2-3 pips above. So this will be the 1 hour risk entry of the 4-hour non-structured flag. Because it is a 1 hour structured flag, 1, 2, 3. I will look for this entry now. Continue the move. Continue the move to the downside. Okay, so once I get back into our seminar and say afterwards I will calculate my positions. I will calculate the percentages. So I will do that one too. So the second entry now was was a reduced so we a reduced risk on the 4 hour. But this second entry was a reduced. This one was a risk entry on the 1 hour. So this one was a risk entry on the 1 hour because of the non-structured constructed for but it was a structured structured 1 hour. So I took it after rake rejection. It was about 2 or 3 rake rejection. So the 1 hour reduced risk entry for the 4 hour risk entry. So the third entry was a 4 hour non-structured but a 1 hour structured. So let me see, if say a 4 hour non-structured but a 1 hour structured, we can take it as a risk entry. If say a 4 hour non-structured but a 1 hour structured, we can take it as a risk entry. And here we can see that there was a 1, 2, 3 driving price, correct flag pattern, price a dropping impulsively, and I took the entry. So after price dropping, now one will be an entry. Here will be the reduced when price breaks above the structure. Here will be the reduced risk. This entry too is also there. So here will be the reduced risk. So when price does this, the man say, I will delete this. I'll put this one on. Now I take this idea as a double top based on some volume being built here. So I buy a price of a trigger. So I can see say I can mania. Let me go to the 4 hour. Okay, so the 4 hour is not clear. It is not clear. But when I go down to the 1 hour, I can see say within the run, I'll put this one on. That structure we own. After a 1, 2, 3, price number. But we didn't commit to the full move. When I'm a risk entry, when I sometimes enter reduce risk. In a price I turn it back. I'll put this one on. And when price comes to this area, if say me I'm in the right, say me or I'm in the profit, I'm in profit, I can take maybe I won't take this risk entry here. Ideally, this can be a risk entry after some multiple rejections. Yes, this is an entry. If you are in the correct, like you are in the correct position to take this is a risk entry. I tradable based off of volume that has been built. We are capitalizing on this volume that has been built. So this early on in the run, if we are start to cry, we are. So when this is happening, 1, 2, based off of volume that has been built, you can get in on this risk entry if you are in the right position. If you are not, you can wait for the reduced risk. So again, another opportunity. So within this run here, I've gotten the risk entry and the reduced risk, and again the risk entry and the reduced risk. I've gotten the risk entry on the 1 hour and the reduced risk. I've gotten the reduced risk on the 4 hour. So within this run, I've gotten about 4 to 5 entries. So this one is the reduced risk entry on the 2-touch continuation of this volume that has been built. This volume that has been built ever since. Here will be the risk entry. Based off of that non-structured 4 hour. Based off of that non-structured 4 hour. You can capitalize on these runs. If this is the target, you can see 6%. If I'm targeting the overall loss, even let's see here is the target, targeting this loss. But I know say my overall targeting as but from the top from the top ones, it is. I was saying you anticipated that baby you call variable change. Why is it matching the direction echo? So let me travel in so on and then continue. So I take it as that was a 1 hour structure. So this one is the risk entry. And this one is the reduced risk of this 1, 2, 3 structure. And this one is the risk entry of this 1, 2 structure based off of volume that has been built here. and that's the reduced risk. Okay. So on the one it was a 3-touch continuation. Touch bearish continuation. So I took the risk entry and the reduced risk. So we didn't see a time by 4 o'clock. Yes, 6 o'clock in the morning. So it can be at 6 o'clock then now. So 2 opportunities. Let's go back to the farm. So when this happens, price a movie. Yeah, but at least lose price at a movie at least lose here, and then price is correcting. Where am I looking for a sale? Maybe tapping. Where am I? And I price a basu. So baby, me volume was built where I had that 2-touch continuation. Volume was built here. Here is a hook point I'm looking for. So I will look out to tap into this area. If you are watching videos there, you can see that this is not a new thing. I'm in a run. So I'm looking for areas where volume has been triggered or built before, and you can see say this area, and that's why it is non-structured on the 4 hour. But when you go to the 1 hour, you can see say it is structured where volume was built here near trigger volume. So when price is coming and there's a likelihood price will snap back to this area. What happened? Price is snapping back into this area. After we left all of this gap here, again 1, you have this touch here 2, and a 3rd touch. Now price here dropping. This one is a 2-touch continuation. The mechanics is available, which is this price leaving these gaps here. Available, and when price comes to this structure after with this rejection and this blue we will see, I can enter this opportunity as a 4-hour risk entry. But before price about tap into this structure, you can say if say a 4-hour structure that we can take it as a 1 hour known, and we can take it as a 1 hour reduced risk if it's a 1 hour structure that. So because of saying we are 4-hour structured, 2-touch continuation clear. Let's move back to the 1 hour to look at say if we can take or we can see the risk entry. So that one would have been 8 o'clock. Here is the risk entry for me. Here would have been the risk entry for me. Put my stop above the highs. And then target these lows 6%. So this one would have been the risk entry for me. When price ever into this structure, I'm not looking forward to take this remove just because I see person who say you're closing red momentum shifts. I will be always to talk about this momentum shifts. The closing red and now enter from here. After 1 hour momentum shift, 1 hour close, put my stop above the highs, and then I target the lows. So this one will be a risk entry on the 1 hour. And then when price it push it down, this can be a reduced risk. After about 2 hour candle. So this one can be a reduced risk. Maybe you take it a reduced risk. You won't say that place in the year the risk entry on the 4 hour. Maybe you take reduced risk on the 1 hour. That place is the risk entry on the 4 hour. So within this here, this entry now you're looking out for this 4 hour structured flag me taken as a 1 hour structure. 1 hour structured and the 4 hour structured risk entry on the 1 hour and reduced risk on the 1 hour and the risk entry on the 4 hour. You've gotten 3 entries. You've gotten 3 entries within this structure. Within this entry panel you're looking out for. So within this one, you've gotten about 4 entries. You've gotten about 2 to 3 entries. You've gotten about 3 entries. You totally ignored that structure way as price came to this third touch here. So first impossible we encounter. We are only focusing on this run here from this sequence after volume was triggered here, and you can see we've gotten about 7 to 8 entries. So when price is happening, when I'm in the structure, say me I'm in a run, if I miss this entry where I'm not going to FOMO into any opportunity be like me, like I'm not going to be emotional like I've missed any opportunity or something. Why? Because I know say if I don't get this run, definitely there will be price will build a volume, price will correct, and because I have the skill set of a professional, I can get in on another opportunity and I'll continue the move. There's always entry. There is always opportunity available. There's always opportunity available. So afterwards, you can see this structure again. Very insurance entry, but I won't enter on the insurance entry, but I can identify. But they mention here 4 hour structured and non-structured 4 hour flags. So you can see a insurance entry, but any 4 hour structured. So we are only looking at 4 hour structured for now. Why I said drop P. Okay, you can see say here is a 4 hour structured. Now volume has been built, but volume has been built above the hook point or the key inflection area, the key inflection point where sa volume, the bigger volume nankasa, the yellow key out for the starting, as in the starting. So when price is moving, when price has moved from point A, here is point B, I'm looking outside, there can be a reverse. I look for 4-hour momentum shift and look for continuation, or yes, to play this range. But how do we happen? How do we happen? In a volume, a building above in value area. So we a 4-hour non-structured. So volume na building above a 4-hour non-structured. You can see say there's instead of any structured one, there's no structure to it. But let's look at it on the 1 hour. We can see say if a 4-hour non-structured that's a 1 hour structured you will take it as a risk entry on the 1 hour and a reduced risk on the 4-hour. So let's look at the structure. So me likely I like to use this one more often. So when who said here will be an inflection on the 15th. But no saying 1, 2, 3. This is the structure I will look out for. This is the structure I will look out for. Price a push up, so I see. So if you are in a position now, here is the risk entry. After price pull back impulsive, you put your stop above, and then if there can be multiple ways. Me personally, I won't take this trade, but we know say the mechanics are available, the entry is available, a tradable opportunity. Then I mean taking is at these areas, what I'm expecting it to happen is a price will break the structure. You break back in impulsively. You build the volume like what has happened on JP225, and then you continue the move. So on JP225, what has happened here is price about and have a weak structure. You push back in impulsively and build the volume. This is what I'm looking for price to do. Say what happened during the week ahead. Impulse correction and continuation. During last week I was looking for a price ever drop. Price better appeal into this structure. We move down temporarily for about 3 days. So within that 3 days, I was able to capitalize on those opportunities and work that way with like 15%. So price moving positively in correction. If price everything up from some inflection, we are fine. Now I'll capitalize on the move. Everything I said, this inflection cannot stop price. Price will break it back in, but the mechanics now happen when I say it's what I'm looking for. We left, so we was above the structure. Price, it's only we a breaky. This low was a low that broke below the inflection. In a buy, in a mini look out for hook points. In a mini look out for buys. This low we took out this low. And this low is still below that low value. But now we broke below, we broke above, yeah, now price above the inflection. And I see. So when price about this year, there can be this structure, volume will be built here, and then price will continue the move either to the outside here or to wherever. By how our price are positioned in the whole, any relationship it have with this inflection, it can move price to the outside. So if CC happen now, then you can understand why it's here on the NZDG Pro and the so to protect myself, the entry is there, but I won't take this. I'll rather wait for price to break below the structure, and then we build volume beneath it or on this volume, and then we continue the move. This will be the moves I'm going to look out for. This will be the moves I will look out for. And when price comes to tap into these structures, this one, when price leave this one, volume was built here, we broke above here, price ever for. Here will be an entry I will look out for. And when price don't commit to the full run, I can be able to capitalize on up to Hasi. When price don't commit to the full run, I can see say we don't commit to the full move, volume and Kasa was here. Then here will be the gap. This one will be the full run. That will move to the lows. So around this area on as inflection. As an inflection. and then price will drop it. This one we are for one unstructured. Let's look at how the structure is on the 1 hour. So I'll put me this reflection on this one, price and tap into the structure. I won't get that entry. And then this area comes, price have a drop it. You leave a hook point, you find some drop it. These are removing the moves I mean, these are no moves I'll get. But when I reach here, I can position myself here. Price are dropping. The living volume was built here. Price echo. I can get in on this move and this structure here. Okay, we are trying to tap into the structure. There was a gap, so I won't get in on this move. And the price will come back to tap into the structure in this 1, 2, 3 fashion. 1, 2, 3 driving price. So 4 hour structured, 4 hour non-structured. 4 hour structured, 4 hour non-structured. You can see say here will be the bigger 1, 2, 3. At the third touching, here will be the override. So is it 4 hour structured or 4 hour non-structured? So let's look at it on the 4 hour. So this one we can see it's a 4 hour structure. It has the little price action. There was a gap here. Price up tap into this structure in a corrective fashion. So when price comes here 4 hour, I can take after some rejection, I can take it as here and put my stop above this structure 35 pips and look for targets at the lows here 5.4. Here is around 22 okay, so now will be an ideal entry, and then on the 1 hour I think I'll wait for price to break back in, and I will enter like this. This one will be the ideal entry for me. So the price every move down, we still move up. Price don't commit to the full move. When price don't commit to the full move, it means price is seeking a better area of value. Price will be leaving gap or as you come into the structure impulsively. We break it above, we break it back, we break it back strongly. And then you have this correction. And the price will push you down when we do as it. So with this, up to us will be 3.59%. Up to will be 4%. So let's see, this will be an entry. How many am I getting in? You will leave gaps here. You have this mechanics available. Again, price don't commit to the full move. It means price is seeking a better area of value. And when price come back to the zone, I'm making say there's this value area here, and then this one is a reversal model towards the zone. Price the movie impulse and this correction. Within this correction, we had middle structures. Price about to tap into the structure. Third touch. So within such structures, you can see price. Maybe I'm position me home. Volume was built there, or volume was triggered there. There has been a gap, and then I will look for a signal and a confirmation. So here, on the 4 hour. You can see here the liquid. Here is a 4 hour structured. A 4 hour structure. If it is a 4 hour structure, you can take it as a 4 hour non-struct, as a 4 hour risk entry, like this. And you can see most of the time, if say a 4 hour structure, that you take it as a 1 hour, as a 1 hour structured risk entry. So on the 1 hour, when price push in such structure here, then put my stop above here, which will be 18 pips. So I'll leave it around 2 pips for you to breathe, for the trade to breathe, and then I look for the lows. First low, here will be the first target, and then at least my overall target will be the lows here, which is around 12%. So that one will be the risk entry. And when price push back in impulsively, like this, when we get this impulsive move, put my stop above here and look for the continuation move, 7%. Here is the 1 hour structured. This one is a 1 hour structured, and I'm not going to go into details on the 1 hour structures yet. So you can see if you go to the 15 hour, that one will be a correct structure on the 15 minutes. So this one, see, we will be a reduced. This one will be a risk entry. This one will be an insurance entry on the 15th. So this one is a 1 hour structured, and you won't say on the 1 hour structured, a 15 structured also. If a BBC here, we can take it as a risk entry. Take it as a reduced error. And then we continue the move. So multiple opportunities, entries, bunch entries. That's why when I make an entry, I don't FOMO into any opportunity. Imagine getting on just the reduced risk, not just the risk entry, let's say reduced risk. and you are targeting that lows, you can see even targeting these lows here will be 4.5%, and that is just that entry. You can get in on this opportunity if you have the skill set. You can get in on this opportunity from the risk entry. Put your stop above and then target these lows. Let's say these lows will be around 5%. Again, price has come back to this structure. You can take this structure to these lows, 9%. So you can see, if you have the skill set of a professional, you can be able to capitalize on the move that I capitalized on. So if I can see say now this was the structure. Price moving impulsively, and you can see it is just within this round and may getting 9%, 7%, and 8% within this round. Just from here to this one now, but when you have multiple opportunities, you can use many multiple opportunities to the downside here. So yeah, 4 hour, we have 4 hour structure, and with this 4 hour structure, now got some multiple opportunities. When prices be here, I will position myself at this area. And then when we see this, and see this. So on the 4 hour, we see a movie impulse and the correction towards the zone. But when I zoom out, we will say a 1, 2, 3 structure. Oh, this 1, 2. And then we price tapping into this value area where volume was built. Some 1 hour for some 1 hour structure, no. Volume was built there. And then so within this structure, again, we had an impulse correction continuation. So we're 4 hour structured. So if we're 4 hour structured, let's say a middle session with a woman, then it means the middle session with a woman, it means volume. A 4 hour structure, I can take it as a risk entry in the 1 hour. I can take it as a risk entry on the 1 hour here. Put my stop above the highs, and then I target the lows. So I'll risk entry will be at the highs. Put my stop above here, and then I'll target the lows. So this is the beauty of how I trade. You can see this is the risk entry, 13%. I can get in on the reduced risk, which will be the risk entry on the 4 hour too. So after this impulsive move, put my stop above the structure, which is the reduced risk. Then targeting the lows here, 9%. Here is the insurance entry, and it is 1-on-1 unstructured. If it is 1-on-1 unstructured, how am I going to refine it? So a 1-on-1 unstructured, it's not 15 minutes non-structured, where this volume was built. So I can take salary as a reduced risk on the 15 minutes. Reduced risk after price equity, such structure. Place my stop above here. Then I'll target the lows. Here is a refinement of the 1-hour structure. So it is like a teaser into the 1-hour structure, the advanced entry that I use. This one is advanced. The 4-hour no gives a more clarity. It gives more clarity. So I will go back to the 4-hour so that we hit the million. But what I just showed you was the refined one, the refined entries on the 15. If I'm capitalized on this one now, how am I going to capitalize on this one? And you can see we have this impulsive run to the downside. Price left a hook point here, another hook point. So here we've been an area I'm position more volume. We has it in a gaps. My price airdropping. Okay, so this is the structure I've missed. But no 4-hour, I can see it's on the 4-hour too. So we left these 2 points here. Price came back to tap into the structure. Now price equal. So this one can take this, put your stop above, and then you target the lows. Target the lows. So when we go back to the 1 hour, you can see price came back to tap into the structure. 1, 2, 3. And then this area here. So this what we even here. I remember I said I had multiple opportunities within the structure. After price LEV is in. So here I think I position myself at this area. We left a gap. Price tapped into the structure in the corrective structure. So I remember I said I had this entry here. I'm going to see more. And then I had that entry, yes, I think. I remember there was also retesting the back end of this. Yeah, with this, it was that whole point. So I positioned myself at this area. And price broke above. Here was the mechanics that I looked out for. The mechanics I looked out for. Price started into the structure. I targeted this lows. And then price dropped it. Difference in that. We have a looking for these 2 points. So this was the structure I was looking out for again, and it hasn't happened yet. So this has been the structure, the 4-hour structured and the 4-hour non-structured. Within this run, multiple opportunities, about 30 to 50 to about 70%. Within this runs, multiple opportunities. You can see, not only was I able to capitalize on multiple opportunities in this run, and this runs, and this runs. Even when we were in these structures, I was still having opportunities. I was still getting opportunities within these corrective structures. I was still getting opportunities. So I have insane advantage over the average player in the market. Yeah. So that will be all for today, and that will be all for tonight.